Joining us to discuss the ramifications of the Saudi oil strike is John Kilduff, founding partner at Again Capital. Welcome back, John. Good to see you.
Same here. Good evening.
What are your thoughts? It was a large strike, and it comes at a time when Iran is offline and Venezuela is also offline.
And the fact that prices didn't go even higher, I think, speaks volumes to the soft demand environment that we're dealing with. The slowing economies, particularly in Asia. There was some key data out of China last night that further evidenced the slowing industrial impact that the U.S.-China trade war is having. So the fact that we were able to sort of hang in there, only get WTI crude, our U.S. crude, up just above $60 a barrel, which is a reasonable level for it in normal circumstances, I think speaks volumes to the weakness that's out there.
I've seen today two estimates about what the impact will be on gasoline prices in this country, 20 cents, maybe 25 cents. What do you think, and what can the U.S. Industry do to try and mitigate some of that?
Well, there's no shortage, for starters. Let's just get that off the table, neither for crude oil nor gasoline or any of the other refined products. There's plenty in storage, plenty being made. There's plenty of crude stock inventory to process to continue to supply the country adequately. What will have to happen, Bill, is that these tensions are going to have to calm down. Right now, the oil market is rightly pricing in a terrific insecurity. There could be another attack. Obviously, Saudi Arabia is incredibly vulnerable to these drone strikes or to these cruise missile strikes, whichever it was. They do not have an adequate air defense system of any kind if they couldn't protect their crown jewel. So those prices will come racing to the pump higher. Probably by the end of the week, you'll see that full 20 cents priced in. And then what happens next is the turning point here. Mm-hmm. Does the U.S. respond? Does the Saudis respond? Do the Houthis engage in another attack on the infrastructure that further limits Saudi's ability, A, to recover, or B, knock more oil offline? The
language this afternoon from the White House was a little softer than it was earlier this morning, for lack of a better word. Does that give you an indication that maybe there will be more of a time difference between the time that we hear what the U.S. is going to do or Saudi Arabia?
There's clearly no rush to war at this point. It doesn't appear there is even an appetite for it. Mm-hmm. I can tell you that now this was a significant attack on Saudi infrastructure. You have to believe there has to be some kind of response, but these attacks, in smaller in scale, have been going on for months, and the Saudis have done nothing other than to try to hit the Houthis in Yemen even harder.
Right.
So the oil, for the most part, keeps flowing. The Saudis, I think, have a terrific ability to restore most of the output rather quickly. And there was also reports they'll be fully back online by the end of the month. So not necessarily a huge crisis for the market, but certainly the bubbling cauldron of geopolitical risk persists.
John, thank you so much. John Kilduff with Again Capital.